Let's talk about those movements now. We've got Nadir Thokan from SEI Investments who joins me now. Thank you very much for your time this afternoon. Nadir, let's start with the all share, marginally in the red this afternoon, drawing back somewhat from those massive gains that we saw earlier on in the week. What would you say were some of the major contributors to today's close?
Yeah, so evening, and thanks for having me. Yeah, look, so I mean, it was a fairly flat day. Obviously, there's a lot of volatility that's still out there, and it's pretty challenging to navigate against this backdrop of increasingly complicated outlook for the world on spiraling inflation and concerns about global recession. So that's quite tough to navigate. And obviously the market is really a voting machine in the short term, and particularly noisy voting machine at the moment. So very difficult to kind of predict these day-to-day moves. Obviously, there's some big movers today. We saw ArcelorMittal was up significantly on the day on the back of their SENS announcements. We saw Nedbank was up really nicely on the back of their SENS announcements. Two positive SENS announcements, which is arguably a little bit surprising, given how much pressure the South African economy is under and all the negative doom and gloom we see around us. Those two companies were certainly the two standout news items for the day on the local market, and then obviously that massive inflation number that came out, the 13-year central bank is likely to do tomorrow. So a lot of macro news, obviously driving the market at the moment, both global and local. And those two company SENS announcements on the day, certainly the two standout stories and positive SENS announcements, and both Nedbank and ArcelorMittal reacting really positively to those SENS announcements.
And we'll get into the details of those announcements in a moment, but I want to reflect on that inflation figure that you've just mentioned. Obviously, South Africa is not the only country that is dealing with insane levels of inflation. And there are concerns that the more we see this, the more aggressive the South African Reserve Bank is going to have to get when it comes to hiking those rates.
Yeah, well, I mean, you said it, it's the Reserve Bank really is, and central banks globally really are under an incredible amount of pressure. We're talking about the Federal Reserve increasing interest rates by 75 basis points potentially at their next meeting. That would be the largest margin of an increasing interest rate since the early 1990s. So the largest margin in over 30 years. And obviously, the South African Reserve Bank, there's talk that we may see a 75 basis point increase. Certainly isn't the consensus view, but not ruling it out that we get a 75 basis point increase tomorrow. That would be the largest increase in since the early 2000s for the South African Reserve Bank. So I'd say in about 20 years. So central banks are grappling to kind of react to how quickly inflation has quickened up. We've seen all over the world, the UK, the US, inflation's at 4 or 5 decade highs. Similarly, across Europe, we're starting to see inflation really bite. And the drivers of this inflation globally are pretty similar. The primary driver is energy and fuel costs. We saw it in our inflation numbers. Fuel costs up 45% or just over 45% over 1 year. Food inflation is the highest it's been since South Africa was at the height of a drought in early 2016, and that's obviously on the downstream effects of higher fuel prices. So it really is tough going in that, a lot of this inflation is, cost push inflation. Arguably, central banks can do very little about that. And I guess, where South Africa is at a disadvantage to the rest of the world is that our growth and the state of our economy is already exceptionally fragile with things like electricity blackouts, with things like high unemployment, whereas at least globally, there's very good employment and, the economies are coming off a strong base. So really challenging times to navigate, no doubt about that.
What's not challenging times for ArcelorMittal and Nedbank, Nadir, is that their updates today indicated that their profits are going to be quite nice for shareholders. Arcelor saying that some portions of the business even exceeded expectations in terms of revenue that's going to be collected there. And then Nedbank, those profits are going to be up by about 28%, it indicated. And it's interesting that they are performing this way against the current backdrop.
It is, and look, I mean, I think in the case of Nedbank, let's put things into perspective. Yes, the half-yearly numbers look good from a year ago, but earnings are still significantly below where they were in pre-pandemic levels. So I think that's a very important caveat to mention that, yes, year on year it's improving, but overall the conditions are still tough. Look, I mean, Nedbank is obviously benefiting or likely to benefit from the endowment effect going forward because they don't hedge against, large interest rate moves to the same extent that other banks do. And obviously in an interest rate hiking cycle, that's going to likely be positive for their earnings. They've reported very, very disciplined cost increases, keeping costs relatively well contained. And on the strong profitability increases, and we know South African banks are very conservative. So we're seeing that, those loan losses are well within what has been provisioned for and likely to remain the case, if we do see a marginal increase in interest rates. If we start to get a very aggressive increase in interest rates, that's when we could see those non-performing loans increase. That increased, provisions needing to be put away, like we're seeing with the US banks in the current reporting season, Goldman, JP Morgan, Citibank, etc., all having to increase their provisions against loan losses on the back of increased interest rates. So something to watch out for from the 2023 year onwards. But for now, certainly surprising on the upside. And ArcelorMittal, no different. And really the big story there is just benefiting of strong global steel prices. And managing to offset some of the challenges which they mentioned in their SENS announcements around electricity shortages, around high unemployment in South Africa, around striking action. So overcoming those and really global steel prices being a strong tailwind for them.
Nadir Thokan, as always, thank you very much for your time this evening. He is from SEI Investments and he was giving us a wrap of the markets day and also just the outlook on inflation ahead of the SARB's MPC. They'll be making the interest rate announcement tomorrow. So